Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, Paul, we're back. How you doing, bud?
Good, man. Just went to Chick-fil-A, so that's always motivating and delicious.
Yeah, I can still see the Chick-fil-A sauce on the corner of your mouth. Maybe
Yeah. No, I think I got
use a
it.
napkin next time.
Actually, I use the avocado lime ranch dressing. If you haven't had that, it's phenomenal. It's
Okay.
not healthy at all as well.
I use ketchup. That's about it. I don't get fancy with anything. I like original everything, like original Pringles, original. I mean, pretty much everything. You add something different to it, and it's like I don't know. It's too much for my
Like
taste
cherry
buds.
Coke.
Cherry Coke's legit. I used to live on that when I was a kid.
But you just said you like the original.
Almost everything. I don't drink much Coke anymore these days. Coca-Cola. But well, good, man. I'm enjoying a beautiful day. I worked out down by the lake today because it's mid 70s and sunny, and it's just nice to be outside. So, but here we are. So, I think today we are going to talk about term life insurance. So everybody thinks, hey, we're whole life guys, right? We're infinite banking concept guys. We deal with whole life, which is predominantly what we write, but we write just as much term insurance as we do whole life insurance because term insurance is typically a part of these contracts that we put together. So just to get this clear and out there right off the bat, we are not against term life insurance, but we will talk about why we are not against it and how it can be properly used, because there's a difference in how we use it versus how other people, financial entertainers, promote it, right? So, Paul, why don't you just start off by kind of explaining to everybody just the quick differences between, there's two types of insurance out there. So why don't you explain that to everybody?
Yeah, basically there's permanent insurance, right, which is under the technical categories or whole life insurance. It doesn't matter what type of whole life. It could be dividend paying or just regular vanilla whole life, or it could be universal life, which has a few different flavors as well. Well, I won't get into that, but you have variable, you have index universal life, and just regular old vanilla universal life. The original product, but still no better in any form. But anyway, and then there's term insurance, which is so for if I could explain this in layman's terms, right? It's kind of like the difference between owning a home and renting a home, right? So whole life insurance or any permanent type of life insurance would be like owning a home because you build equity in it, right? You build equity in the policy just like you build equity in a home. And then term insurance is like renting a place where there's no equity. The landlord has all the equity, right? The guy who owns the place. So term insurance is temporary insurance that just covers you for a period of time, whatever that term is, 10, 20, 30 years or longer in some cases.
Right, and that's the easy way to remember. It's called term insurance because it covers you for a term. It's called whole life insurance because it covers you for your whole life. So no matter how old you live to be. But we believe in the power of whole life insurance and we promote it. We both have multiple policies of our own. So we're big believers of it. But guess what? We also believe in term life insurance. There's no one size fits all plan for everybody. But there is a good argument for probably most people to have term life insurance. So let's talk about why you would want, let's talk about the different types of term insurance. There's term that just covers you for, usually it's like 10, 20, or 30 years, right? And then at the end of that term, what happens? It's gone.
Yep.
It expires. Do you get anything back from the tens of thousands of dollars you paid into it?
Nothing.
No. What is all of that? What is that tens of thousands of dollars? What does that become?
Well, it becomes lost opportunity.
Yeah, lost opportunity for you and profit for the insurance company.
Oh yeah,
So,
they love it.
yeah, they
Yeah.
love it. And it's because term policies almost never pay out. Like almost
Yeah.
never.
Almost never. I think depending on who you talk to, it's less than 2% of the time. I've heard 1% of the time, but it's somewhere in there, folks. It's you have to die during that term, and odds are you're not, right? Because you
Right.
buy this policy when you're young or whatever, and it's likely never going to pay out. But that doesn't mean it doesn't have value during the term, right?
Correct. Right. So it just like you have insurance on your house and your automobiles, and hopefully your house never burns down or a tree never falls on it, and or you never get hail damage or tornado damage. But if it does, great, you got insurance in place to cover that. If it doesn't, are you ever? Is anybody ever really upset that they had that insurance in place, even though a tree never? They're like, doggone it, a tree never fell on my house the whole time I had insurance on it. Of course, if you're living in a house, you still have insurance on it, I'm sure. So no, because it serves a purpose. Even though you hope the goal is to never need it, which is what insurance is. You hope to never need that insurance.
Right. It's something that you're transferring risk away from yourself, whether it's your human life value, whether it's your home, whether it's your automobile, right? You're transferring risk to the insurance company from yourself. And you're kind of partnering with millions of other people who are doing the same thing, because not everyone is going to die at once, right? Not everyone is going to lose their, a tree's not going to fall on everyone's house at once. So that's what makes insurance. That's how it works, right? That's what makes it a great business for both ends, right?
Yeah.
For the consumer and the company who is providing the insurance.
Right. And you mentioned a word in there that I think we need to explain. You mentioned human life value. So this is probably something we've discussed on previous episodes, but it's important to cover here is you and I both believe that you should maximize your insurance coverage for your human life value. So what is human life value? Simply put, it's how much your life is worth in an economic sense. Now, that sounds crass because, of course, every life is priceless. But according to actuarial science, and it is a science, every life has an economic value assigned to it based on your production abilities. So if you're a 30-year-old and you're making $100,000 a year right now, the life insurance company will say, well, you have 25, 30 years left that we could insure you, during your working career, and we'll assume you're going to make $100,000 every single year from now till then. So therefore, you got 30 years left, $100,000 a year. That's $3 million you can be insured for, right? Am I doing the math right? So
I think so.
yeah, it's pretty basic.
Yep.
So
That
that
surprises
is
a lot of people, though. Right?
right.
They have no idea that like, yeah, I have a $200,000 policy or a $100,000 policy through work or something, which is group term generally, and they have no idea that, wow, come to think of it, that's not going to last very long. I do need, you're replacing your income, folks, right? Just like you really need to. You've
Yeah.
got family, you've got expenses, and your income, the loss of your income is going to be significant for somebody who relies on it.
Exactly. And that's one thing that I think most people who are in the insurance business, most agents, they do what's called a needs-based analysis. They say,
Right.
okay, how much insurance do you need? Well, if you talk to me and Paul, it's going to be, let's not do a needs-based analysis. Let's do a human life value analysis and see how much can you get, because that's really what you want to max out.
That's right.
Right.
Generally, I think I've found this to be absolutely true. Is if I am maxing out my human life value between a combination of convertible term and permanent insurance, or all permanent insurance preferably, that I'm covering that needs analysis that other agent would have done and then some many times over.
Yeah. Yeah. But most agents aren't going to do that because it's probably going to sound like you're just trying to sell me insurance I don't need. But that's why we're different, because we focus on the infinite banking concept itself instead of just the life insurance component. But now let's talk about convertible term insurance. So I think most people listening are probably very aware of term life insurance. And hopefully, if they don't have whole life or a properly designed infinite banking concept style policy, they at least have term insurance to cover their family's needs at the bare minimum. But convertible term insurance is probably something that very few, in my experience, talking to prospects and clients, very few people have ever heard of convertible term life insurance. So, Paul, what does that mean? What is convertible term?
Yeah. So convertible term insurance is a type of term insurance. Let's say 10, 20, 30-year terms that you can purchase from a life insurance company. What you're doing, you buy this product, is you are essentially not only you're going to cover your death benefit needs, so you're going to decide, hey, I need this much term to cover my human life value. So let's say that number is $1 million in death benefit. Fine. But what you're also doing by buying convertible term is you are locking in your ability to convert that term insurance into a permanent policy or policies over the period of that term. So let's say you have a 30-year term convertible term policy for $1 million. That means you have 30 years to convert that term policy into a permanent life insurance policy. And the kicker is that once you go through underwriting and get that policy approved, you no longer have to go through medical underwriting to convert that term policy, that temporary policy, into a permanent policy. And that's very powerful because the future's unknown, right, Dave? Like, I don't know if I'm going to get cancer tomorrow. No idea.
Right. I don't know if somebody's going to sideswipe me and and then all of a sudden I'm disabled and
Can't work.
And I can't work. I become uninsurable.
That's
So
right.
that's really what you're protecting yourself against is you're like locking in your health status today for the next 30 years if you get a 30-year convertible term policy. So you can lock in your health status today. It's really sad, man. I don't know. I'm sure you've talked to, I mean, at our age, you start having friends who them or their spouse has, cancer, breast cancer, or some other, several, right? And they're like,
Several.
oh, we had been talking about getting life insurance for the last couple of years and we just didn't get around to it. Now I have cancer. And the good news is you can still be insured, but it's going to take about 5 years of being cancer free, of being a survivor to be insurable again. And even then you're certainly not going to get the best ratings, right? Because that's just the numbers. It's the facts that you're more high risk. So, but what if you had that convertible term policy? Maybe it was a 30-year policy and you're 64. It was going to expire when you're 65. And hey, by 65, you're supposed to have zero debt. Your mortgage is paid off. Kids' college is paid. You've turned $100 a month into $3 million in your 401k, and you have the ability to self-insure, right? Like you don't need to leave anybody a dime because you've got enough in your mutual fund, your 401k, and the equity in your home to provide for your spouse who's going to be alive for another 30 or 40 years. And then at 64, turns out, man, I didn't actually get to where I thought I was going to be. Or at 64, you got lung cancer. I'm sorry, you didn't smoke a cigarette in a day in your life, but you have lung cancer. Like just a bad roll of the dice. Do you really want that term insurance? What would you pay to have the option to extend, to turn that term insurance into a permanent policy that's going to be there no matter how long you live, so you can leave something for your family? Like, I bet people would be willing to pay a lot of money. But at that point, they're uninsurable, and they'll never be able to get another term policy even. Right?
Yeah, that really gets lost, Dave, in the whole, buy term and invest the difference conversation. Everything's always, hunky-dory, and we're going to earn 12% compounding year after year in the S&P 500 through our mutual funds or through an index fund or something else, some managed portfolio, right? It's just going to happen. Wow.
Yeah.
Amazing.
Right.
And $100 a month turned into $3 million. It's just so amazing how that, wait a minute, that's not going to happen. Sorry.
I mean, if the person preaching that was a professional, a licensed professional in anything, that would be pure and simple negligence. And I think they'd be liable to be sued by plenty of people who listened to that advice and ended up, with a bad deck of cards.
Yeah, the whole industry at large can just do better, I think.
Yeah.
It's just they're overpromising, right, and under-delivering in many cases, in a lot of cases, I would say, and that's unfortunate.
Yeah. Yeah, it really is. Well, so convertible term insurance, Is it going to be more expensive than non-convertible? Of course, a little bit.
It's not. Yeah, it is obviously because you're paying for that option to convert at any time during that term. But I had a guy the other day say, yeah, I ran a couple of illustrations for him, and he's like, it's not that much, it's not that bad. And I was like, great, I got
Yeah,
nothing to compare it to, but this is what it costs, and it's based on actuarial science, and this is the price of it.
yeah.
Because as I think Todd likes to say, there's no deals in insurance.
There's no deals in insurance, right? Insurance is a science. Every type
Yep.
of insurance,
Yep.
backed by numbers and hard data and facts and history. But yeah, you're going to pay a little bit more for that option to convert that, which you would expect to pay more because the insurance company is taking a much greater risk on you than they are, because they're basically saying, okay, we're going to allow you to keep this policy until the end of your life, however old you live to. Where if it's non-convertible term, they're just saying, hey, well, you only have to make it to 53 years old and then we're off the hook.
That's right.
And chances of you dying are very, 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 very low.
Right. And that's why it's priced appropriately, right? The net amount at risk for the insurance company, the odds of them paying the death benefit on a term policy is statistically extremely small. And I always, we're around military people all the time, right? So I talked about SGLI and how much the company that administers SGLI for the military, how much premium that company is
Oh my
collecting on a monthly
gosh.
basis.
Wow.
Okay.
Yeah.
Just right. It's
Yeah.
a lot. $26 a month times, 1.5 million people or whatever it is,
Yeah.
or 2 million, whatever it is. But vice the payout every year, right, on those policies. Very few. Thankfully, very few military service members, are dying every year. But it does happen from time to time.
Yeah.
But you could tell that's a great business for that company, whoever it is.
Absolutely. The insurance business is a great business. That's why Warren Buffett, bought Geico decades
Right.
ago. I
Yeah,
mean, he
absolutely.
loves the insurance business because it involves guarantees, really on both sides of the ledger. So, what are some other reasons you might want convertible term? So, let's say you're bulletproof, you're not going to get sick. What could another reason be that you want the option to convert that term? Well, one of the things, a lot of people want to get started with the infinite banking concept, and especially young people, the biggest hang up for older people is that I think I'm too old for this. The biggest hang up for younger people is I don't have enough money to do this, right? Which could be a fallacy to begin with, because as we've stated before, you just start where you're at, and then you can build policies from there. But what this does, one of the great advantages of this is, again, allows you to lock in your current health at whatever age you're at, and you're not getting any healthier as you get older unless you make a concerted effort to do so. But in general, we're all getting less healthy as we age, right? So lock in your insurability with the plans to convert some or all. You don't have to convert all of it. You could have $1 million convertible term policy and decide 3 years later, I want to convert 300,000 of it to a whole life policy, a properly designed, specially designed dividend paying whole life policy. And you just take 300 from that term, move it over here to whole life, and you still got 700 term remaining, and you got a guaranteed whole life policy right here that you can start doing IBC with. And then you could
Yep.
do it every couple of years as your income increases, your means increase. Maybe you sell a house or you sell a business, you start a business, whatever, right?
Yep. And what happens, folks, what Dave just explained is 100% correct. What happens, right, is that term policy shrinks. I think you said it was 1 million. Now it's 700,000, let's say. So now you're paying premium on a lower amount of death benefit, right? So your premium on that term policy will shrink accordingly based on your attained age. But it generally, depending on when you convert, like I opened up one and converted it, within a year. So the premium shrunk a little bit.
Yeah.
And then you'll have a separate policy, new whole life policy. This is just the mechanics of this, right? You'll have a separate whole life policy, a brand new policy separate from that term that you can practice IBC with.
Yeah. Case in point, I was working with a guy last year at some point, and he had just started like a couple new businesses, and they were doing really well, but he was still like, you know, I don't feel confident enough to say it's going to continue like this for the next couple years. So let's get, I'm healthy right now. Let's get the like $2 million of convertible term in place. And then once I'm confident in how these businesses are going, I'm going to go big on a properly designed whole life policy at that point, as opposed to just starting with a tiny little one right now, something that he was sure he could do. So that was a great plan. And now, not only does he have that in place, but now he's got it in mind. He's got that there for a specific reason, in addition to just the death benefit in case he meets his early demise, right? He's got that for a strategic reason to convert that throughout the rest, the next 10 or 15 years, right? Which is my plan too. So Paul, do you have term life insurance? Do you have convertible term?
We do. We have one on Tammy actually.
Yeah.
Yep.
And I've got a large convertible term policy. I maxed out my human life value about 2 years ago. And because I've got several whole life policies that I'm paying big premiums on, but I wasn't in a position to be able to pay, to double that premium to max out
Right.
my whole life, right? To max out my human life value. So instead, I locked in my insurability through a term policy. I think I got maybe just a 10-year term. So I kind of put a clock on it to force myself to convert that over the next 10 years to max out my human life value. And if I need
Yeah.
more, I'll get more.
It's a great strategy. I mean, I think you're spot on, and of course, putting that 10-year clock is beneficial because you'll be younger when you convert that whole life or
Good point.
that term into whole life, right? Because the older you get, the more premium it's going, which is fine if you're an IBC guy. Like I want to pay high premium, right? So, but it does take more premium dollars to max out that death benefit as the years tick by, and you 45 turns into 50, and
Yeah.
55, 60. It takes a lot, right?
Yeah.
So
So you make a good point. We'll just make that very clear that when you do convert that, you've locked in your health rating at today, but if you convert it 10 years from now, you'll be converting it at that age. So you'll be, let's say you got a preferred health rating today, you'll keep the preferred health rating, but you'll just be 10 years older when you convert it. So instead of 42, I'd be 52 with a preferred health rating. So they got to take that into account. Of course, that only makes sense that, you're 52. We got to take your age into account.
I locked my buddy in at age 43 for 20 years, super preferred.
Nice. Yeah.
Yeah, so he's very happy. Yeah, it's outstanding.
Yeah, that's really good. I just had a buddy of mine just got preferred today, same age as me. So, I mean, it's possible if you're in relatively good health. So, one of the other things, let's talk about death benefit, because with the way we design policies, so we flip insurance on its head, right? Just like a lot of other financial concepts and conventional wisdom out there. But what we think of when we think of life insurance, the average consumer thinks, I want to get as much death benefit for as little premium as possible. And that's what term life insurance does for you. And that's what convertible term life insurance does for you. But what we do with specially designed dividend paying whole life insurance, we do the opposite. We try to get as much premium for as little death benefit as possible. So you may get to the point where, hey, I've got all this premium going into this, but it's only given me $500,000 of death benefit or $1 million of death benefit, and I need $3 million. Well, that's when you just throw another convertible term policy into the mix if they don't have the funds to max that out, right? And then they've got their death benefit covered, right? They met their death benefit needs, which is very important. We don't ever want to overlook that because we are insurance guys. That's our primary concern, is making sure your family's taken care of if something
No
happens to you,
question.
right?
Yeah, absolutely. And why not lock in? Again, I'm going to say this a lot, and I stole this from James. I like the way he says this. The future is unknown, right? Like you have no idea
Brilliant.
what's going to happen.
Right.
It's brilliant. It's a fact, and it's brilliant, right?
Yep.
The future's unknown. Why? We're guarding against the unknown here, right? And bad things, unfortunately, do happen occasionally. And again, go through your Rolodex of people that and there's several by the time you reach age 42 that that have not been well,
Yeah.
right? And I've had several friends that have had leukemia, or other cancers, or it sucks, but it does happen, and every time it happens, I'm like, man, I hope they have proper insurance.
I know, man. That's the second thing I always think when I hear of that happening to a family, that or somebody dying too early. That's the second thing on my mind is, oh God, I hope they had enough coverage to take care of their family. Yeah, because it's sad when it's a GoFundMe page that you end up seeing.
Yeah,
I mean,
you end up contributing to.
Yeah, you end up contributing because the fact is, if they had not put that on the back burner and made that a priority, which it doesn't take any time at all.
Nope, not
to
at
get
all.
that done, right?
This brings me to one other point when we talk about insurability is, the best time to get it is when you're young and healthy. And when I say young, like my children, and I think your children have too, Dave, my children have had whole life insurance since they were babies.
Yeah.
I forget whatever the youngest age to put a policy in force. It might have been 30 days or
I think
6 months or
6 days.
6 days.
Yeah.
Right. So it was fairly quick, and I had a great agent back then who we're still friends with today. But the kids had whole life right away. So regardless of whatever happened to their health, they have the ability to pay premium for the rest of their lives because it's whole life insurance.
Yeah.
And that's extremely powerful. So, and I'm not trying to sell insurance to your kids, folks, but if you want IBC, the best time to plant a tree is 20 years ago, right? The next best time is now. Get started while they're young and get started now.
Yeah, you make a good point. The best time to get life insurance is when you don't need it, right? Just the best time to get any insurance. You can't get a home insurance when your house is on fire and the fire trucks are rolling up. Crazy. Yeah, imagine that. You can't have a pre-existing condition with your home and get home insurance, right? Oh, it's on fire, but it's a pre-existing condition. So yeah, there you go. So do we believe what's better, whole life or term life? It's kind of like that Miller Lite debate. Great tasting, less filling. Great taste, less filling. Both. That's what we believe. Both. There is a place for both in most people's financial portfolio, if you will, and financial strategy throughout their life. So, like we said, there's no one size fits all. Some people may have a different mix of whole life and term. Some people may not need term whatsoever. But realize we do believe in that. We write a lot of term life insurance contracts because it's part of most of the whole life policies we write. And that's a whole nother discussion about the design of policies, and maybe we'll get into that at another point. But yeah, so you got any parting shots?
No, I think this is the guys at work today, I told them that we were recording an episode on convertible term. So, and I know, they're listeners. So shout out to them, but this will be a good episode for them to listen to because it's something that I've often talked about. And again, it's enlightening to people don't know a lot about insurance. And I like being able to at least provide that gap that the financial world has not provided them. Because they're being told to buy term and invest the difference or whatever. But there's just a slightly better product out there for most people.
Yeah, absolutely. So if you're going to get term, please make sure it's convertible term. So there's plenty of companies that sell it. A lot of mutual life insurance companies sell convertible term.
Yep.
And it's worth the slightly higher premium to lock that in and have options. You're creating options and guarantees for yourself in the future.
Yeah, peace of mind goes a long way, I think.
Yep, absolutely. All right. Well, good episode. And, I'm sure I'll be seeing you soon, Paul, for another one of these.
All right, brother. See you.
All right. Thanks for listening, everybody. We'll see you.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.